Hey there, friend, and welcome back to Thomas Mayhew's Real Estate Channel. In this episode, he will be interviewing Aaron Baaske, a distinguished expert in the insurance world. With a wealth of experience and industry insights, Aaron will share valuable perspectives that will not only broaden your understanding, but might just redefine the way that you look at insurance. Whether you're a seasoned expert or just starting to navigate the insurance landscape, this interview promises to be an enlightening journey. So, let's jump right in.
Hi, welcome to another episode here, and today we have a fun interview with Aaron Baaske with Lighthouse Insurance, and he's going to drop some knowledge bombs I think that will be very, very helpful. And I wanted to interview him because, well, I've known a lot of insurance agents because I'm a realtor for 15 years. But when I met with Aaron, I was profoundly impressed with his sincerity, his ethics, just a number of those boxes you like to check when you're thinking about referring somebody to your precious clients. And so Aaron checked all those boxes. And with that, Aaron, could you introduce yourself and just tell us a little bit about your background?
I appreciate the opportunity, Tom. Yeah, my name is Aaron Baaske. I'm the co-owner of Lighthouse Insurance here in Lorain, Ohio, and actually started in insurance clear back in the year. I graduated in '88, so started actually right out of college in the insurance business, and then after about 3 years of insurance, then I went into the real estate business and was a real estate appraiser for 24 years, and then come back in 2014 back into the insurance business. So full circle.
Sure. Which type of person should be reaching out to you basically at the end of the day as well?
It's a good question. I think for us, one of the things we've spent a lot of time on is trying to find out what is the target, for us? What is the specialty, and really who do we serve best? And we call it the risk management business. So that's kind of what we do, is help people manage risk, the risk of life. Things happen, but we don't want to be financially devastated from that risk. So if it's a storm or, God forbid, a car accident or something like that, we want to try to take what we can financially to help right that situation. So really the perfect client for us is one that is interested mostly in making sure that everything is done correctly, that their assets are protected, and that it's done with companies that they don't have to worry about. And a lot of times we have people that maybe aren't the perfect client. No offense to them, but they typically are only interested in price. So they will start out a conversation with, hey, I need car insurance, how much? Or I need homeowners insurance, how much? Or I need business insurance, which we also do, commercial lines business insurance for people too. But when the conversation starts that way, we usually start trying to vet whether or not it's going to be a good match, because again, it's your money. We're never going to tell you how to spend your money, obviously. But I also want to make sure it's a good match so that we aren't getting in the way of maybe that agent that's maybe better fitted for somebody that only wants price. So there are people that are just in a financial situation where they just need the cheapest insurance possible. And in those situations, a lot of times if we find out that that's really the only thing they're interested in is just price, we typically refer them to somebody else that's better qualified to handle just price. So a lot of times the funny thing is, Tom, is the price, when you look at the difference between doing it right and doing it on the cheap, on a percentage basis, it's really not much different. But it just, again, back to that perfect client. The perfect client is somebody that says, hey, I'm happy to tell you both, because we represent probably about 60 different companies. So we have a lot of choices for people, but we will show you the price difference. But a lot of times that company maybe is not the best for you in terms of claims and taking care of you and your family. And it sometimes also is not the best in terms of when we need to service a policy, add a driver, add a car, or take a car off or whatever. sometimes those companies, we deal with them every day. We know the ones that are good and the ones that aren't so good. And we'd rather, for a few dollars, make sure that it's done right and make sure that you're not frustrated as a client saying, well, geez, I didn't know this $1.27 difference was going to be this much hassle.
Right.
I get it. We all want to save money. I'm not against saving money, but I'm also, you typically get what you pay for, and that's true in insurance, just like it is in real estate or anything else.
Sure. Well, I can understand it's not a one-dimensional question and answer.
Right.
It's multidimensional, and so you're going to give the multidimensional answer, and that's your ideal client.
Right.
I have a lender that I like to refer to because he has an average clear to close time of 8 days, and in real estate business, that's incredible. Now he says you can have any one of these three things, and I wanted to see if you had something similar to say. You can have cheap, fast, or good. Which two of the three did you want?
And that's typically, I would say that in the marketplace, whether you're talking about lending, you're talking about real estate, you're talking about insurance, you're talking about retail, Amazon is a great example. You typically can get two things, but you typically can't get all three. And so we try to kind of focus mostly on quality. We want to make sure that the people that we're dealing with are appreciative of quality, and that's what they want. Typically, our clients, they kind of fit into kind of one of two buckets. One is that they're very conservative in terms of risk. They don't want to be exposed to a lot of risk. They don't want their finances to be liquidated because they didn't have something covered, or they have a lot of assets. Both tend to be more on the conservative nature when it comes to risk. So we spend a lot more time and energy with making sure that everything is covered correctly and that we bring up things that maybe they've never talked to their agent about, or it's never been brought up.
Never considered.
Exactly. So just the lot of little things that marketplace is constant. It's dynamic. It's always changing. And we want to make sure that we're keeping the client current, and we're also making sure that we're keeping the policy current with what the client's needs are, because clients' needs change too. Sometimes assets change, or there might be different. Maybe the kids are growing up. They need to either get a car, or maybe they need to get a new place or whatever. So we try to have that open line of communication so we can keep up with them.
Is there a certain period of time at which you would say call me, or let's set up a time? Would it be 6 months, a year?
We try with, again, depending on the client, if they, especially as a commercial client, they typically have a lot of needs throughout the year. They might need a certificate of insurance, they might need a bond, they might need driver updated. So we have a lot more communication with our commercial clients just because their needs are different.
They're already in touch with you multiple times.
They're constantly, calling us, and we're happy to take care of whatever we need to. With our personal line, so like somebody that just say has a home and or auto, or maybe a couple of autos, they typically once a year is we look at the the renewals when they're coming up. We see if there's any need for looking at other companies. Sometimes there is, or sometimes they have hey, I'm buying a new car. Can you look at this car and see if this is something that's going to make my insurance go up? So I'll tell you a quick story of one of our clients, not using their name, but very successful client, got a very successful business, and he decided that he was going to buy a Ferrari. And so he called us and said, hey, I got this Ferrari, brand new. Red, by the way, beautiful car.
Of course.
And
do they come in any other color?
Yeah, exactly. So we quoted it out, found one of our carriers that kind of specializes in that kind of car, and believe it or not, cost less than $1,400 a year. So just a little bit more than $100 a month for that Ferrari. He was covered. And
that's amazing.
Probably, it was definitely a surprise to me. I don't know if what he was expecting, but the new cars, even Ferraris, have a lot more safety things involved in whether it be car avoidance, or Sometimes even making sure that they park themselves and all kinds of different things. So those things help a lot.
Well,
So.
I'm guessing too, everybody else on the road is very concerned about don't hit the Ferrari.
Yeah.
Whatever you do. You
That's
can wrap
right.
yourself around a tree, but don't
Don't
hit the Ferrari.
Yeah, that's one of the things that when we're talking to people about their property damage, especially on their car, is that you're seeing, we're here right now in Lorain, Ohio, and kind of in the center of the county, kind of a thing, and there's more and more cars that you're seeing that are high-end cars. So you're seeing, more Lamborghini, you're seeing some Bugattis, you're seeing, things that are, way above the $100,000 threshold to replace. So I try to always let people know is like, I know that maybe 10 years ago or 15 years ago, you didn't have to worry about those things. You do now, because to your point, I don't get to pick the person that I have an accident with. But when you go to North Olmsted, for those of you that go out towards, Great Northern Mall and things like that, there's now several car dealers that's all they sell. We've got a Lamborghini dealership that I don't know they're open yet, but will be open. I think there's another, trying to remember the name of the dealership, but all very high-end specified dealerships. Porsche is over there.
Aaron, could you talk to us about how much should we be concerned about the rating of an insurance company? Because you have multiple ones to choose from. How much should we be concerned about that?
Yeah, that's a very good question, and something that I wish more clients would ask us. But a lot of times they're very focused on rate. How much am I going to be charged? But when we have the opportunity, which I always love to be able to answer this question, is we talk very much about what's called AM Best. So AM Best rates insurance companies. They rate their financial health, their ability to pay claims. They'll even get into speed, how fast they pay claims in that. But the depth of the portfolio, which is something that is really important when it comes to insurance companies, is how healthy are they? There's a lot of names that most probably people would hear, and if I said them, oh yeah, I've heard of them. But I always like to then back that up with a rating and see where they're at, because sometimes you have insurance companies that maybe are pretty well known, but they're not, say, as strongly rated as others that aren't as well known. And part of the reason could be that they're spending a lot of money on advertising and marketing, getting their name out there to try to get more customers. But that's not always, as we all know, it's not always the best path towards financial health and stability. So I like to know what I'm buying. I like my customers to know what they're buying. And financial stability, to your question, Tom, is extremely important. And if I'm only paying a few dollars more and I've got a highly strong rated AM Best company versus one that's low rated, I at least want to know what that cost differential is. Let's put it that way.
I see. Okay. So that is very significant, what you said there. That is very interesting. I had a friend that was a CLU when I back in a land far, far away, California. And I had a situation with, I have to leave some details out to protect the guilty and so on. But he kind of got somewhat involved, and he was a little bit intense about something wasn't being done right. And so he started teaching me a lot of things. Being a CLU, I think he knew quite a bit, right? And so I learned quite a bit from that, and we ended up sort of rectifying and steering away from where we had put some resources and moved a different direction because of that. So I really appreciate it. Well, all that information I learned when I relocated to Washington State. So this is my fun little story. This young man, he looked like he was fresh out of something, and wet behind the ears and so on. And he came to my house. I answered an ad on Facebook or something or somewhere. And he came out, and he was going to help us see if we qualify for this insurance and so on. And so I thought, I wonder if he knows anything yet, And so then I started thinking back to the things that my friend Richard had told me about the CLU, and so I asked him some softball questions, and then eventually I asked him a really hard question, and I was just waiting to, I knew he couldn't answer it. I knew that already. He was just fresh out of, insurance school,
Sure,
I guess,
sure.
the training. And so he said, Mr. Mayhew, I don't know the answer to that, but I will get you the answer. And it wasn't 2 days, and he got me the answer.
Good.
And I that's it. You're my guy.
Yeah.
And
good
we
for
did
him.
a lot of business together over those years. And I appreciate it. And I feel very much that. So he was honest. Like, that's what I was looking for.
Yeah.
It's okay if you don't have the answer. If
Yeah.
you're a young guy, like, how could you know all that stuff?
Exactly.
But if you're honest, then I like you a lot.
Yeah, that's a big difference. For sure.
Yeah, and I referred all my clients, his direction, because I knew they'd be well taken care of. So, and I feel the same, with you as well.
appreciate
That's, of course, as much as the CLU and probably then some.
Wow.
Just because
We're
of
all,
years of the business,
we're all
right?
learning. We're
Sure.
all trying to hopefully stay ahead of
Sure.
the information that's coming at us on a daily basis. So we do
Sure.
the best we can. So.
Well, I love the Ferrari story. Do you have any other good stories you'd like to share? Like, it's a strange thing in a sense that it's a win in
Yeah.
insurance, because there might have been a loss
Sure.
involved in the win, but
Sure.
hey, the insurance came through, and that's what it's supposed to do.
Yeah, I think, and maybe kind of coming around to more your neck of the woods, which is real estate. So we actually have a lot of investors that we work with.
Okay.
And the funny thing is that most of them are not actually from the state of Ohio. A lot of them actually are based in Miami, typically. They are buying real estate in Ohio, but they're not from here. And a fair amount of them actually aren't even from the country. They're actually outside of our country.
Okay.
So, and people, a lot of times, of course, I've been in real estate since I was 15 years old.
Wow.
And I was a real estate appraiser for 24 years.
Wow.
And now find myself in the insurance part of the business. But I've always been fascinated by real estate, and I always loved people like you, Tom, because I call it the front line. So you guys are on the front line. You guys are the one facing the market every day, dealing with clients, dealing with the ebbs and flows of the market. And really, to me, I always love talking with knowledgeable people like you, because it's like keeping your finger on the pulse of what's actually going
What's happening
on.
right now.
The appraisers, we were the guys that analyzed all the data post-mortem, as it were.
Right.
And that's one thing is like, well, you can come up with a number, but the people that were actually doing the work, you being there in the marketplace, that was, for me, was very very informative. And for investors, that stuff is extremely the information is very important. So I've tried to keep myself as much as I can connected to that pipeline. And when you look at the market, back to what we're talking about insurance, is that a lot of times with investors, it doesn't matter if it's one property or 10 or 20 or 100 or more. We can certainly help them, but part of the thing that they do when they're approaching us is they're doing the same thing that a lot of my clients with just one home do, which is how much. So that the question starts with how much, and we are always happy to get to that, but I don't think, especially for an investor, it necessarily should be the first question. Do I think it's a question? I think it's within the top 3 to 5.
Okay.
But I think I'll give you an example,
Okay.
because I think stories, kind of help make the point.
They do.
So we had a storm, as most of you know, in northeastern Ohio here just a few weeks ago.
Right.
Okay. And we, just out of this office, probably fielded about 283 claims calls.
Okay.
So people that had water in their basement, or, that's mostly what it was. And so when an investor, when they typically buy properties, a lot of times they'll buy within a city, within an area, or whatever. And what you're really doing is you're pooling risk. So when you think about it, again, from the risk game, what you're doing is you're putting a lot of risk in one place. And what's the greatest exposure of risk of real estate? Well, things like fire and tornadoes and wind and hail and those type of things, as well as liability. But the most claims that we see typically are weather related. So when you think about it, weather is out of all of our control. Okay.
Yes.
God knows
I've
what's going to happen, but we don't know. But when you pool your risk in one area, here's one of the things that investors should always think about. One of them being is that if you have individual policies, you have individual deductibles. So let's say in the example of, I've got $1,000 deductible. Yeah, but if you had 10 properties, you now have $10,000 deductible. And if it's a hailstorm, it's not going to hit one of your houses in one area. It's probably going to hit all 10.
I see.
Another thing that should be asked, I think is a very important question is, do you have replacement value or do you have what's called actual cash value? If you have actual cash value, yes, it's cheaper. However, those claims, when they come in, are all settled on what's called a depreciated value. So we'll go back to the the example of somebody that owns 10 properties, and let's say they had, as an example, 10 roofs that were affected by hail. Well, all of those roofs now at ACV, which is actual cash value, are going to be depreciated. And let's say they're all closing in on 15, 16 years old.
Yeah.
Well, 15-year-old roof of a 25-year-old roof is more than 50% depreciated. So if those roofs cost an average of, let's say, $10,000, well, guess what? That 10,000 times 10 is now $100,000. You first are paying $10,000 on the front end for the deductible. Then you're paying another $50,000 on top of that for your share of the depreciated value. So that what could have been a claim on one centralized policy, because that's what we like to do, is put all the properties in one policy, one deductible, and then we can talk about whether or not the investor wants to share in the risk or wants replacement value, because yes, it is a little bit more expensive, but when you have a claim like that, it's not financially devastating, because most investors don't want to have to shell out 50 or 60 grand on a single event.
Right.
But that's the kind of difference and the kind of thing that we like to talk through with people, whether it be a homeowner that only owns one property, or if it's an investor that owns 10 or 100 or more properties. It's your money, you spend it how you want, but I want to make sure you know what you're buying, because unfortunately many agents approach it as, I just want the next client. So what they'll do is they'll just say, when they hear, oh, I want it cheaper, well, they'll give them a cheap policy, but they never know exactly what they've got until a claim happens, and then you're arguing with an adjuster. The agent has no control over what that adjuster decides.
Right. Surprise, surprise. Right. Well, it seems to me there's lots of reasons to. Well, I kind of wonder if you have like a sort of a cheat sheet of questions, or or like priorities when you go talk with your insurance agent. What should you, and if you had something like that, we'd be happy to put it in the notes or what have you, or click here. And,
be happy to get that for you, and for the people that follow you, Tom.
That's great.
Be happy to do that.
No, I think that's a tremendous, be tremendous value to people. I think that, especially with all of the turmoil we've had, we've had turmoil in the insurance industry, we've had turmoil in the real estate industry. We're going through it right now. There's some very interesting things going on that could create some significant changes going forward.
For sure.
So all the more reasons maybe people should evaluate, like, how strong is my company actually, because maybe they're kind of wavering. You wouldn't want to have a claim and all of a sudden, nope, that company went belly up.
Yeah, and I think you raised a very good point. And I think back to the whole idea of shopping, and even Dave Ramsey will say, you should shop your insurance every couple of years or whatever.
Okay.
Well, we're always happy to do that. We have a lot of companies that we can shop if that's what you want to do. But you should be aware of some things. And I when the client will give me the time, I'll be happy to always talk to them about this. Is to your point about disruption, we in the entire world are going through something that we've never gone through before.
Right.
We've never shut off the planet economically, for a period of time, and we did that for about 18 months, shut the entire planet off.
Right.
When we turned it back on, a lot of things were different. One of which being is now we're in an inflationary environment. Everything's going up in cost.
Yes.
So that's one thing. Well, insurance companies typically are very slow to react to change. So what we're now experiencing with insurance companies goes clear back to when we turned the world back on in what was it, 2021. They're just now starting to get prices back in line with what the new world is in terms of
the
cost.
new reality.
Yeah, so the good, the bad, and the ugly is what that causes is disruption for people to say, oh my goodness, my rates are going up, I need to go shopping. Again, we're happy to do that, but here's the good, the bad, and the ugly of shopping. And I don't care if you use me as an agent or you go to another agent, because we have great relationships with Allstate agents and State Farm agents, and any of
Sure.
the companies that we refer business to, and back and forth. We try to develop great relationship with other agents
Right.
because it's not as important to me. I'd love you to use our company, but I'm mostly interested in making sure you get the information you need to make a good decision. So when we look at things like cost, and you say, "Oh my goodness, I've been," I had a client just the other day that called me, and good client, and we've got the commercial side, and State Farm, which is a competitor, but a good friend of mine,
Yeah.
has the personal line side.
Okay.
Well, the client, State Farm's client, called me and said, "I want to shop with you to run my personal lines over here." I said, "Well, I wouldn't recommend that." Now it seems like, why would you not
Right.
why would you
Sure.
turn business down?
Sure.
And the reason was the same thing I'm going to tell you as I told him is
Yeah.
because right now, if you're changing an insurance company, and especially one you've been with for a long time, a couple things are going to happen. Everybody's rate in the next 18 months will go up at least 20 to 40%,
Wow.
probably minimum. Most companies probably aren't going to see even what's called rate stabilization until 2025.
Wow.
So everybody's rates are going up, but here's the bad news about when you shop. When you move to a new company, like, oh wow, I just saved, all this money because I moved to this new company. New business with an insurance company takes a minimum of 2 and as much as 4 years for them to break even and start making money on that new business. Because there's a lot of admin costs and different things that come in issuing a new policy. What does that mean to me that I just moved to this new company?
Yeah.
It means you are going to be targeted most for rate increases because you're new business as opposed to old legacy business. And if you have a claim with this new company, there's a decent chance that even one claim will cause them to non-renew you. Okay? So people were like, "I don't see that happening." Well, trust me, I can point you to many clients that were surprised that happened, because in the environment that we're in right now, everybody, including insurance companies, are trying to stay away from risk.
Yeah.
And when you're shopping in today's environment, you're considered a risk, and more of a risk than a normal, just everyday client, because why are you shopping? And if it's just a rate thing, well, that's one concern for a new insurance company. But the other concern is with their new business, typically, their claims are much higher on new business than it is with existing business.
I see. Very interesting, Aaron. That's a lot of food for thought.
Well,
It really is.
the industry is a $1 trillion industry. There's a few of those, but not a lot of those on our planet. They know how to manage risk. They're very good at it. But every company out there right now, when you look at what's called their combined loss ratio, so that's all of their, their claims history, all of their expenses, pretty much every company to a person to a company is over 100% combined loss ratio. And when you look at that, and that's more than a year. Some of them are going on in 2 years of more than 100% combined loss ratios. So they're paying out more. So if it's $100 that comes into the company, they're paying out more than $100 to keep that business on board. Well, they can't continue to operate that way. So there is going to be continued rate increases for the foreseeable future. But as a consumer, I want to make sure that people understand is it in your best interest to move? Maybe, maybe not. It depends on how much of a difference are we talking about in rate. If it's me and I'm shopping, if it's $1,000 or more, I'm gonna probably move. Okay. But if it's like 20 or 30 bucks, I don't know that it's worth the risk to go to that new company, because there's a whole lot of things that happen as new business that I don't want to take that risk for 20 bucks. However, if it's 1,000, then maybe we're all going to talk. And I would encourage it if it's somebody, and I could show them that we're $1,000 more expensive. I tell them to stay where they're at. And I've done that even in the last week, Tom, where I've told people, you're in a great place. I can't be competitive even, but even if I could, the fact that you've been with this company for so long, that's a good thing. Do I never want to break up a bad relationship with either a professional agent or a good company unless there's cause. If there's reasons, let's talk about it. But we all we all want to have good relationships.
Yes, absolutely. Well, and I think your cheat sheet will help people because there's the cost, but there's also how strong is the company. Will they actually pay out? Like I'm dealing with one right now where I'm actually purchasing a house myself, and we're waiting for one of those companies you mentioned to kind of come around and face the music that there's some storm damage and they need to deal with it. Right. And it's not the actual cost or actual value, or it's the replacement value.
Oh, okay.
So it's a good insurance as I understand it, and so I imagine they'd probably want to drag their feet as long as possible, but.
I understand.
But the winter's coming. We don't want more damage.
No, exactly.
So, but yeah, this has been really educational, even for me, and I've been around a while. So I'm not surprised. And but for anybody that would like to get in touch with Aaron, is there a best way that the people could reach out to you?
Happy to give them the office number, which is 440-984-3463, and any of the people here at the agency be more than happy to help you. And we're here every day, Monday through Friday, and typical office hours of 9 to 5 Monday through Thursday, and 9 to 4. I let them go and enjoy their families on Friday a little bit early, so not till 4 o'clock on Friday. But everybody is licensed here, which is not always the case in every agency, but we make sure that all of our people are licensed so they can talk to you about anything they need to. But we also have specialty people that maybe just handle commercial or handle the personal lines things. One thing that I did want to mention for those that are like you and I, Tom, we're getting more into the I guess mature years and that. If you're over the age of 62, we now have a Medicare specialist and actually team that handles Medicare. And a lot of times, and I didn't even realize this, but Jonathan, he's Dr. Jonathan. He came to us from one of the hospital systems and started explaining to us that a lot of people don't review their Medicare like they should, and it should really be done, according to him, once a year because the changes are so significant now in the programs.
I see.
He gave me an example of a lady the other day that was spending about $400 a month on her medicines.
I see.
And he put her into another program, and was able actually to save her that same medicine, same exact medicine, took it down to $43 a month.
Wow, that's a 10x.
And so put a lot of money into her pocket, and it was literally just a matter of putting her into a different program. So
I see.
you don't even pay us for that. That's all paid from Medicare directly. So it's just a matter of, we like to be able to help people, and even if it's just giving them information, happy to do that. But a lot of times, especially with those of us that are on fixed income, it's nice to be able to have an option as opposed to just all my costs are going up. Well, sometimes if we can have that conversation and help them, we're happy to do it.
That's very significant. Well, that's very good. Is there some other thing we want to do to tie this up with a bow, so to speak?
Yeah, it's up to you. If there's something that you would like to know about or talk about, I mean, I'm happy to talk about even real estate. If you want to talk a little bit about that's always fun. We can kind of bat the ball back and forth.
Sure. Well, I do have a number of investor clients, and most of them are not from around here. I got several in California, Florida. Worked with somebody from Israel for a while. Didn't quite make things happen. The other ones all have been making things happen. With an appraisal, see, I have a friend, a really good friend, that is one of our top commercial appraisers in the whole state of Ohio.
Oh, wow.
He's actually amazing. So if you got a 50-story building in Cleveland, he's your guy.
Oh, wow. That's awesome.
To me, that's like, wow.
Yeah, those guys are really smart.
Very impressive. So he's a good friend. And so if I have a really tough one, I can call him and say, what do you think about this? And then I get an education all over again. It's really great.
That's awesome.
Everywhere I've done real estate, I've always managed to find the top appraisers and make them my friends.
Yeah, that's good.
And that seems to be very beneficial sometimes. So now, when you were doing appraisal work, were you doing a mix of residential and commercial, or
We did mostly residential.
Okay.
I think if I remember correctly, the last count was something like, I think it was 2.3 billion in real estate values, but most of that
Wow.
was single family homes.
I see.
And
It's a lot of
then
homes.
we started towards the end of my career. We did start getting into some commercial, but
Okay.
nothing like the
Yeah.
gentleman you were talking about. We were
Yeah.
talking about small businesses, maybe a auto body shop or
Okay.
something like that didn't
Sure.
add a lot of say value to the number. So we did.
Okay.
I think if I remember correctly, we were pushing over 8,000 homes that we had appraised
Wow,
in
I
the
see.
24 years of doing it for a
Wow.
while.
That's a lot.
But yeah, I saw all kinds of things that in some cases wouldn't want to repeat,
I
especially
see.
in a podcast.
I see.
But just it was an education almost on a daily basis.
Wow.
So it was fun. Learned a lot. Towards the latter part of the career, we did a lot of foreclosure work
Okay.
work directly for Fannie Mae,
I see.
and so that was another big education.
Sure.
Yeah, so it's just really interesting to see how they approached handling thousands of properties at a time, and then how they approached, in essence, the disposing of those properties. And it probably would surprise most people on how they approached it,
I see.
because in appraiserdom, what we always would talk about typically, because it was always typically done for the banks,
Okay.
Fannie
Sure.
Mae standards, Freddie Mac, all that. And so they wanted to always talk about market value, and market value is very important to everybody.
Sure.
But for appraisers, they usually know about market value and usually are giving a market value estimate, but that's not the only value that we as appraisers can seek. Sometimes we're looking at investment value,
Okay.
which
sure.
is a different definition than
Sure.
market value. So
Sure.
it's
Cap
from-
rates.
yeah, exactly. Or it could be what's called liquidation value.
Okay.
What Fannie Mae was doing was more of a liquidation value,
I
although they
see.
didn't want to call it that.
I see.
But they were trying to force sales within a normal marketing time, especially if you remember back in 2008,
Mhm.
we had all kinds of properties on the market,
Mhm.
and things were sometimes more than a year on the market.
Mhm.
But there wasn't enough buyers for the number. That sounds crazy today, especially
Sure,
for
right.
younger people.
Oh,
like,
yeah.
what do you mean there weren't enough buyers?
Exactly.
There weren't enough buyers for the amount of real estate that was being dumped on the marketplace.
Right.
So Lorraine, which we sit right over the line in just in Lorraine,
Mhm.
back in 2008, everybody points to that as the real estate crash.
Okay.
But real estate values here and mostly throughout the nation didn't hit bottom until 2010.
10.
Yeah,
Mhm.
2 years later.
Okay.
So as an example, in Lorraine, and I love numbers, so
Yes. Me too.
I saw
I'm
and
an
watched.
engineer by background.
Yeah,
So
sure. So
yeah.
you
I'm,
would
I'm happy with numbers.
you understand
Yes.
the love of numbers, but
Sure.
I watched in the beginning of 2010 to the end of 2010, the average value in Lorraine dropped by 70%. So 70%. So the average house in Lorraine was selling for around 68,500 at the beginning of 2010, and by the end of 2010 was selling for under 18,000. That's obviously a huge drop. A lot of things happen when those kind of things
Sure.
occur within a marketplace. One of which being is, as you're familiar, Tom, the entire basis now for the market
Oh,
of Lorraine was changed.
totally.
So now all of a sudden comps and marketing times and all that stuff is totally changed. Fannie Mae kept trying to push us into a normal marketing time of 30 to 90 days.
I see.
Okay. But the reality is there was so much real estate on the market that in some cases the houses were sitting for 2 years.
Wow.
So again, back to market, you look at market definitions and what that is, we have to be careful, especially whether we be investors or just normal people buying houses
Sure.
and stuff. You have to look at the market. You have to decide what the market's doing. And you and I both know, I think we can agree on this, is that the market's flooded with a lot of bad information.
Sure.
And a lot of the information today is just wait. The real estate market's going to crash. Just wait.
Right.
Wall Street, I just read an
Sure.
article yesterday. The Wall Street is predicting that they're pulling back from a lot of the real estate because they believe that the single family home market is going to go the same way as commercial. Well, I would personally disagree. I don't know your feelings, but based on my looking at the market and the demand versus the supply, I think the exact opposite is going to occur. There's a lot of reasons that commercial real estate is suffering. One of which being is COVID has changed the marketplace.
Everybody stayed home and
Exactly.
zoomed from work.
I talk to people on a daily basis. Like, well, I don't go into work anymore.
Right.
Well, you've got like one of the buildings downtown Cleveland, which is the federal building.
Yeah.
I think I last talked to one of the guys that knows, and he said it's I think it's close to 70% vacant now. Well, those things have effects on the whole marketplace when you have buildings like that are just okay, now they're vacant. So, but on the single family side, it's the exact opposite. There's still not enough, and the builders, they can't produce enough to even meet current demand because they lost all their subcontractors back in 8, 9, and 10.
And
they all went into
back.
other fields. And the young people aren't typically coming into the trades.
Right.
So the ability for them even to scale up,
It's not there.
until we move to a different technology than what we have now, which is stick-built primarily, we're not going to see much change in the marketplace. There's just, those prices are going to continue to escalate while there's a constraint on supply and there's a lot of demand and there's still good financing. They're still financing properties. It's going to be like that for, at least for me, for probably a while. So.
I agree. There's only two things that I've seen that maybe have a little bit of credibility. I was listening to a podcast and somebody had actually gone to a lot of builders in the South in particular, and there was some shadow inventory. So it's not accounted for. So you go listen to the numbers, the official numbers, and you don't hear it. The other one is in place, and of course this was all geographically driven, like what's going on in that area, right? Because so New York City, they just passed a law that said no short-term rentals. So now you have a whole bunch of people that bought into Airbnb, makes sense as Airbnb short-term rentals. Now it doesn't make sense. So it doesn't pencil. So that could have an impact. Okay, there's lots of properties in New York City, so how big an impact will it have? Well, we'll see. So there's a couple things, but in general, I agree. And it's just, look at the data, look at each place.
Well, sure.
See what's happening.
Well, one of the things that, a lot of us like pay attention to is, like as an example, the border and staying way clear of politics. But I look at this as we always have to look at opportunities in the marketplace.
Yes.
So when you see roughly 7 million people probably in the next 12 months or so are probably going to come across the border, the question for us in real estate should be where are they going to find housing? Right now, the government is putting them into hotels. They're paying, as my understanding is, as much as $500 per night per room. Okay, when you do the numbers on that, you could pay for a decent hotel. I just actually priced one in Huron that was, I believe the offering was 42 rooms. It was $2.4 million. You would pay for that in less than 5 months based on that rate. So when you think about, to the point of oh my goodness, there's all this commercial real estate and everybody's working from home and stuff. Think about being able to change a piece of commercial real estate into another use where now all of a sudden you can, in essence, sublease or get a government contract, and maybe now all of a sudden the rent rate might go up even much more astronomical. Because one thing I know about the government is they're not afraid to spend money. And when there's a need like that, they are going to find a way to, in essence, make sure these people are housed. Again, staying out of the politics of it. But if you're an investor, I would say you look at that and you find maybe there's opportunities in the marketplace that weren't there before that we can look at and say, you know what, the market's always changing and finding new things to do, and maybe this is another opportunity. So.
Yes. Hey, I mean, in that case, $500 a night. Forget short-term rentals. This is fantastic.
It's and again, I'm sure they're not paying that necessarily on every case, but in cases like cities where they're having, again, a problem if you just housing normal people looking for hotels
Yes.
or housing in general, of course the price is going to be much higher. So it's one of those things where don't look at the problem. The media always wants to point us to the problem because what they want us to do, they want us to be emotionally upset
Sure.
because it's easy to control people that live in fear.
That's right.
But we need to look at it from where is the. I always try to ask myself, where's the opportunity? Where's it?
Right.
The question is empowering
Yes.
as opposed to
That's
being in a defensive posture.
Yes, it's a very entrepreneurial question too.
Yeah, right.
I resonate very strongly with that. Is there more than one Lighthouse insurance company? Because I think I found another one when I was looking.
There is.
I was like,
Yeah.
that's not the one I want. Where's Aaron? And so,
there is more than one Lighthouse insurance company. We are if you're looking like
Located.
Google, we're located in Lorraine, but if you look Lighthouse Amherst, because that's where we started, was in Amherst, Ohio. We are
like your
easily
address.
found.
Your address here
Yep.
is
4789 Levitt Road, and it's Lorraine, Ohio 44053.
Okay.
We're just over the border of Amherst,
I
and
see.
it's
Yeah.
the county.
It's a good location.
Yeah, it's
Now,
a
can
good
people just
location.
walk in and,
Oh, sure, yeah.
hey, I'd like to talk to Aaron?
Yeah. Yeah,
It's
it's sometimes, I get pulled out of the office sometimes, but I'm always happy if we need to, meet with
Nice.
somebody, a friend,
Yeah.
especially of yours, happy
Sure.
to do that.
Great.
But I'm pretty accessible. If I'm not with somebody, a lot of times it's hey, friend of Tom's or
Yeah.
whatever, come on, bring them back.
Great, great.
So.
Well, that's wonderful. Well, I just know people are in good hands with you, and I really appreciated the information you shared. It's really something to chew on and something probably to take action on too. Even if the action is, I don't need to take an action right now, at least I thought through the questions, or maybe I downloaded the cheat sheet and I thought through those questions and I'm okay for now, or maybe it's time to talk to Aaron or whatever. And maybe Aaron tells you to stay put, or maybe he says, well, we can improve the company and we can do this and this and that. And,
that's one of my favorite things, Tom, is whether it be me or a customer, whatever, I always try to get people to start learning how to ask questions, because it's, to me, one of the most powerful things. You can establish, like you did, you can vet a professional by asking really good questions. And a lot of times, there's a lot of professionals that do the same thing that I would do, which is write out a question for me that you pretty much know they won't know the answer to. Because to me, the reason I like to do that is because I want to make sure that they're speaking in integrity.
Yes,
if I know that they don't know, and there's ways to structure questions in a way that they'd have to take time to look it up.
Yes.
And then you can find out, first of all, are they a person of integrity? They say, hey, I don't know, and I go to look it up. And the other thing is, how long does it take for them to get back a hold of me? Are they keeping their word? Because I found in business, we'll just say in the business world, that one of the most important things was vetting that on the front end, because it's terrible when you find that after you've signed a contract.
Wow, this is so valuable. This is so true. And Aaron, the other reason why I felt like I resonated and connected with you so well when we, even on the phone when we first talked, and then I came and talked with you here, is like for me with my clients, I always tell them at some point in our relationship, I tell them whatever's best for you is best. Period. That's the end of the conversation. So don't worry about me.
Right.
We're only worried about you.
Right.
And I feel the same thing is true for you and the way you operate. And, the other thing sometimes that I'll do for people, and I don't know, so like if somebody's in another state, because I have a lot of friends and so on in Washington State, do you, in the insurance industry, is it common that you would refer somebody that's a good agent over? And
we do. Yeah, we do. We're licensed in Ohio, West Virginia, Pennsylvania, Michigan, Tennessee, Kentucky, North and South Carolina, Florida, and Texas. We do write business in those states. Sometimes, though, especially when you talk about coastal properties, so properties that are like within a mile of the coast, it's sometimes better for us to refer them, which we do. A lot of times we refer to, actually I did one today, We referred one to, I think it was an agent in South Carolina.
I see.
They were better versed than we were because it was a
see.
property that was within like a mile of the
Okay.
coast and that.
Sure.
But we, even in the last couple of days, have placed homes and cars and businesses in the Carolinas, and we do Florida,
wow,
we do
okay.
Texas a lot,
That's great.
Kentucky, all that
See.
kind of stuff. So we're always happy to
Yeah.
have those conversations. But like you, if there's a better
Yeah.
mix or a better option for them, with a agent that's there, we're happy to make that connection.
And kind of the reason why I asked is I had this client that contacted me once a couple of years ago, and she said, Tom, she sounded very exasperated. Can you find me a good agent? I said, well, sure. And she was somebody that I was pretty close with.
Sure.
I had sold her a fourplex, and we just stayed connected and
that's
everything
good.
since then. And her dad was a developer.
Oh,
So
wow.
she knew a lot.
Yeah.
Okay, she was not your average client.
Right.
And she had fired 2 agents before she called me.
Oh, did you?
And I didn't know she was moving across the country. And so she said, can you, I said, yeah, absolutely. And so, fortunately, within our brokerage ecosystem, I have an easy way to sort of screen out like who's in the area and so on.
Yeah.
And, this person's good or that person's good. So I get some of that. And I interviewed 8 agents.
Oh, wow.
I spent a half an hour with each one. So,
Wow.
I had to do a good job for her.
Well, I'm
I
sure.
didn't want
Yeah.
to, I fired the third one.
Yeah.
Like, I didn't want to hear that.
Yeah.
And so within 3 days of making that connection, they had a property under contract. And they
Oh,
closed
wow.
it. So,
That's impressive.
yeah, but and of course I used that schema that I
Yeah.
mentioned, the easy softball and then the harder and harder, and everybody gets pretty much weeds themselves out. But I ended up with 2 that were A+, and then I had to decide, okay, well,
Yeah.
and based on my experience with her, I knew which one was the right one.
That's good.
So, but I assume you kind of have the same kind of thing
Yeah,
if you're
very
referring
similar.
somebody.
Yeah, very similar. With before I met you, I had a series of questions that I would ask realtors that would teach me, the same thing, which is things that I knew they would know versus things that I knew that they'd have to look up.
Okay.
And I think the thing that impresses me most, and Tom, you're a student of the marketplace, you're a
Absolutely.
student of people.
Yes.
That for me is kind of very important because, especially as an appraiser, I love the numbers. I love to dig into the details and
Sure.
stuff. For a lot of people, it's just too much information. It's like, I don't want to know all that stuff. Just give me the highlights. Give me the Cliff Notes version.
Yes.
We can do either, okay?
Sure.
But I like to be able to talk about details, and especially like in your part of the business, it's important to know that the professional on the other side at least knows those things. And if you
True.
aren't going to ask the question, I don't know, hire Tom or me or
Right.
somebody to make, because you need to make sure that this person even knows the questions asked themselves. Because, and I've talked to a lot of realtors,
Sure.
both in my current position as well as my former position, and there are very few, when I start getting into just basic, to me, pretty basic questions about days on market and trends and
Yes.
what's going on in terms of list the sale price and stuff. Most don't even want to answer the question, and the ones
Right.
that really scared me were the ones that didn't even know what I was talking about. So it's
Right.
like yet there's still quote unquote successful realtors.
Sure.
So it's like, to me, that whole idea of what is a successful company, like you asked me
Yeah.
earlier, or a successful person or whatever.
Yeah.
Well, it's what they bring to the table in terms of protecting you.
Yes, exactly.
And if you don't do that, then who's doing it?
and in an average transaction, 95% of their skills are hidden.
Oh, sure.
You don't even know they're there, but they're there if you
Right.
need them.
Right.
And I suspect there's certain similarities with the insurance industry.
Yeah, there is.
So,
Yeah.
it's like I know them well for my industry.
Yeah. Right.
But yeah,
Yeah.
interesting. And I do know that, with like my CLU, when we had a trouble, a difficulty, he was a big help, because
Right.
we were up against sort of a formidable, like we don't know anything, and he came in and helped
Right.
a
That's
lot,
good.
and so yeah, if you, for somebody that knows the insides and outsides and all of the vagaries
Yeah.
and all of the details and
Yeah. I always want
what's the
somebody,
value?
whether it be a realtor like you, Tom, or you know, if I'm dealing with an agent, insurance, or whatever, attorney, or you know, a doctor, whatever. The question is whose interests are they more inclined to protect? Their own, the industry's,
Right.
or mine? If I'm in essence compelling them to in essence protect my interest, to be in my corner, I kind of want to verify that.
Yeah.
Questions are good.
Yes.
You know, talking to other clients are also good. But sometimes just, again, getting somebody to sit down with them and just kind of spending a little bit of time. Most of us have at least decent instincts in terms of, is this somebody that knows what they're talking about? Are they just talking, or are they actually, do they care about people? Because that to me is also very important. Do they care about me, or are they just, you know, all into the industry and making money? You know, I don't make any money like sitting here doing this. You don't either.
Right.
But with the idea and the interest for me is I want to get the information out.
Educating people.
I want to help people, and to me that's always a win. You know, if people are educated, my clients
100%.
are very educated. They know what they're doing, and I want to also be checked and balanced by good questions and good sharp clients, because I feel like it elevates the marketplace. It elevates the things that we all have to do and all should be doing, which is doing the right thing.
That's right. I worked at a company. Their favorite motto was "Do the right thing always."
Yeah, right.
You know, it wasn't always easy to get everybody to do that, but that was a good motto. But anyways, thanks so much for listening. And if you have any questions for Aaron, he gave the phone number. Maybe you want to give it one more time, Aaron.
Sure, I appreciate that. It's 440-984-3463.
And I think you know how to reach me if you need me. So take good care. Thanks again for tuning in.